Ladies and gentlemen, thank you very much for the opportunity of coming to address you at this conference. I want to, on behalf of the Irish Government, welcome the ERA once again to Dublin and thank you for coming to see us during our presidency, which is obviously a very important part of our work and indeed the work of the European Union over the very important issues that we address right now. I was intrigued by the theme of your conference here in Dublin, and that theme is the European Banking Union, a turning point, ? And this is an open question, of course, given the enormous crisis that has confronted the European Union and the financial system over the course of the past 5 years. There is a fundamental question mark on where we are and where we are going to get the collective Eurozone economy and the European economy to over the course of the next number of years. And on behalf of the Irish Government, on behalf obviously of the Presidency, we play a pivotal role during these 6 months in bringing forward many of the building blocks that are essential towards banking union to make that prospect a reality. In the past, we've held the presidency during key periods in the Union's history. When the Berlin Wall fell, Ireland facilitated the unification of Germany within the European Union when others hesitated. And in 2004, when the biggest expansion of the EU took place, with the addition of some 10 new member states. Each time we've held that position, we served the wider community interest, arguably the European Union interest, and our current presidency is no different. It's been the government's aim to successfully manage and rebuild confidence around our most important relationship, that's Ireland's membership and our relationship with the European Union. We entered government when both Ireland and the European Union were in a state of substantial crisis. We were determined to meet the crisis head-on through hard work, persistency and determination. It's due to this approach that we are now seeing the first signs of economic growth here in Ireland for a number of years. And I think it's fair to say that confidence has been restored to this country after a very difficult period. And we certainly appreciate the support and the help of our international funders and the European Union especially in regaining that confidence both in this country and internationally. We're a small open trading economy which is highly deleveraged, highly privatised, very much dependent on export growth. And reputation is everything for a small country. For big countries it's important, but it's especially so for small countries. And if you cannot pay your bills and if you cannot obtain funds and have the confidence to pay back those funds, your reputation is diminished. And I think this programme that we have entered, which we will come out of at the end of this year and return in a long-term, sustainable and durable way to the markets, is the best example, if example were needed, that countries can come out of economic difficulties, can come out of bailout programmes and can take ownership of the programme. I think that is the crucial ingredient here. This country has taken ownership of the programme that we had to enter. And as we leave this programme and gain a foothold again in the international money markets, what is crucially important for this country is once we are back to the markets, is to remain in the markets. And I think that is, above anything else, the most important task that we face over the next number of months in regaining our position and regaining the independence of this country. Because countries cannot be independent if they cannot raise money and do that on a long-term basis. We're confident that we have turned the corner and the first building block towards economic growth and stability in this country has emerged. I think it's fair to say, if one looks back even 12 months ago at the predominant question that existed around the euro, that political question was fundamentally this: will we have a euro within 12 months? Will there be a fundamental schism within the 17 member states of the Eurozone? Will there be some enormous division, north against south, whatever? That was the dominant question 12 months ago, ladies and gentlemen. It's not the dominant question now. And the reason why I think we have moved on, the reason why there has been a measure of confidence in the decisions that have been taken, is there has been finally a realization that the actions to be taken across the European system have got to be decisive and far-reaching. And banking union is exactly one of those decisions. Notwithstanding the decisions taken by the ECB, the 3-year money at 1%, the operation of OMT, the very substantial comments made by Mr. Draghi of last year concerning the support for the euro. These also were confidence-building measures. But equally, the agreement at heads of government level on ESM and the decisions on things like the 2-pack and the 6-pack and the fiscal treaty, these were other confidence-building measures in the context of where the crisis was 12 months ago. And the key political point I would make at this juncture is this: we can't be complacent now. We have made progress in the last 12 months as a collective European-wide economy. We can't be complacent. We've got to continue the task, continue to make those changes a reality. And of course, a banking union is a fundamental building block towards the confidence that we all want to see. Obviously, our presidency is focusing on a number of key legislative priorities across the Union. And in preparation for the presidency, we were faced with a large number of legislative files and obviously some prioritisation on those files. For these reasons, the Irish presidency has prioritised agreement on the legislative measures that underpin banking union. This followed the lines of the prioritising outlined by the December Council conclusions, namely the completion of SSM, the Single Supervisory Mechanism, CRD4, the Capital Requirements Directive, and the agreement of a Council position on banking recovery and resolution. We know that the ambitious timeline behind the establishment of the ESM by the middle point of next year requires that the building blocks, the steps, will be in place between now and then, such as the Single Supervisory Mechanism, the question of resolution, and the Deposit Guarantee Scheme. So an enormous amount of work, of integration, of agreement between all the entities of the Union must be completed between now and then. I think it was recently at our informal ECOFIN in Dublin Castle that Mr. Wren, Commissioner Wren, describes the ESM as the big bazooka, the bazooka to beat all bazookas. So in order to have this bazooka in place by the middle point of next year, it's a fundamental requirement, of course, that the building blocks, the steps, such as I've described, have to be in place. And we certainly, during our presidency, have prioritised the Single Supervisory Mechanism and the CRD4, where significant agreement has been found. Banking union is important because it will reinforce confidence in the European banking system. It will also help to break the link between sovereigns and banks and foster the reintegration of financial markets. Restoring confidence in the supervision of European banks can't be more important in bringing stability to Europe. The single supervisor is one of the core elements of banking union and a vital step in breaking the vicious link between banks and the sovereign. The agreement on the single supervisory mechanism provides for an appropriate division of labour between national and EU-wide supervisors agreed by the member states last year. The ECB will be, of course, responsible for the European banking system as a whole and have direct supervision of banks with assets of more than 30 billion euro, while national supervisors will continue with day-to-day supervision of smaller banks. The rules of the functioning of the EBA will be adapted and its role reinforced. The EBA will continue developing the single rule book applicable to all 27 member states. Now, the transfer of these responsibilities to a European level is quite a significant legal step in the development of the banking union framework. During the financial crisis, European taxpayers recapitalised banks who found themselves with insufficient capital to absorb losses. This overhaul of EU banking rules through the capital requirements package will make sure that banks in the future have sufficient capital, both in the quality and indeed the quantity of that capital. And that's a fundamental part of what we have to achieve. We had a very constructive discussion at the informal ECOFIN in Dublin 2 weeks ago, at which member states reaffirmed their commitment to the urgent completion of all of the agreed elements of banking union. To address German concerns, member states also agreed the text of a declaration reaffirming this commitment and stating that they are also ready to work constructively on a proposal with treaty change, which will allow for a stricter separation between bank supervision and monetary policy. Now, the immediate challenges facing us are reaching Council agreement on banking recovery and resolution and deposit guarantee schemes in accordance with the ambitious timetable set out by the European Council conclusions of last year. The setting up of the single supervisor will also pave the way for the European Stability Mechanism to take on the direct recapitalisation of banks. Now, agreement on bank recovery and resolution directives will lay the foundation for a single resolution mechanism, details of which will be published by the Commission shortly. The transposition of the dossiers will also prove to be a testing legal and political issue. The Capital Requirements Directive has a tight transposition deadline of just 6 months following the OJ publication. This will present a significant challenge to Member States' legal actors, but it's something obviously of urgency due to its subject matter in helping ease the banking crisis and respecting EU international obligations to adhere to our commitments in implementing measures previously agreed to. The single supervisory mechanism further embodies a significant legal workload for Member States to transpose into national law. However, we look forward to working with our EU partners in implementing this. Our challenge, ladies and gentlemen, is to maintain the momentum, but yet arrive at solutions that are usable and credible and bring financial stability to the European system. And as I think I alluded at the start, since the start of this crisis, it has been effectively a solution based on trial and error. And indeed, many mistakes have been made. I think there's a necessity to recognise that. I was struck by our very frank discussions at ECOFIN 2 weeks ago. And these were substantial political discussions as well as economic discussions. And given the fact that the people around the table were either governors of central banks or politicians, politics has a hugely important role to play in this. We have got to regain credibility in Europe, in this architecture that we put in place, and also in the new policy tools that we will put in place. We've got to do it in a decisive manner, which shows not only to the banking system internationally within the 27 and to those outside the 27, that Europe is finally getting its act together, that is putting in place the correct architecture to resolve this fundamental crisis, which has been the biggest crisis, one can argue, since the establishment of the Union in the first place. It is a crisis that affects the well-being and the prospects of ordinary people and ordinary families all over this Union. And that is why it's so important that we are absolutely clear in our achievements that need to be put in place in banking union, that we are not complacent about the success that has occurred in the last 12 months, and that we actually seal the deal and get on with this task in delivering the kind of stability that is required. In order for economies to grow, in order for jobs to be created, we need to have a functioning banking system that looks at prudential risk and losses and ensures that a banking culture is actually fit to the task of lending to businesses and to commercial operations. That's what we've got to engender in this country. That's what we've got to engender in other countries which have gone through this enormous collapse. And that is the future of a common European banking system, where ordinary people, ordinary businesses can see an opportunity to obtain lending from financial institutions. We've got to go back to doing the basics right, quite frankly, and alter the kind of culture that has developed in the past decade and a half to 2 decades, where very significant, one might describe as easy money, was established across the system, where lending risk was not properly assessed, and where a rotten culture emerged. I think through the development of CRD4 in particular, we have shown, not just the Irish presidency, but colleagues across the table, that there is a willingness to deal with the issue of banks, and a willingness to have in place the correct architecture. And that architecture is crucial towards the future progress of Europe. Thank you very much for your attention.